Warren Buffett, one of the wealthiest investors in the world. But what if I told you this? He made hundreds of millions without investing a single dollar of his own money. No trick, no coincidence, just a brilliant strategy that almost sounds too good to be true. For 3 decades, the Japanese stock market stagnated. While tech stocks boomed in the US, Japan was considered boring, overvalued, dead. But Buffett saw what others overlooked: 5 Japanese trading giants, strong, solid, and completely undervalued. And the best part? A dividend yield of around 8%. Now for the ingenious part.
Well, the investments began maybe close to 4 years ago, and I was looking at company after company, as I'll do every day, and I just thought these were big companies. They were companies that I generally understood what they did. Some was similar to Berkshire in that they owned lots of different interests, and they were selling at what I thought was a ridiculous price, particularly the price compared to the interest rates prevailing at that time. And so I started buying all 5 of the 5 largest trading companies, and by my 90th birthday, August 30th of 2000, whatever it was.
2020.
And we had bought just somewhat over 5% of each company, and we were buying identical amounts. So we announced at that time that we bought this 5% interest in each of the 5. I wrote a letter to the CEOs of each of the companies saying the same thing, that we would never buy, Berkshire would never buy more than 9.9% without their consent. And that was my word. It was Berkshire Hathaway's word, and they all welcomed us in, and their results have exceeded our expectations since we purchased the group. I think their dividends on average have gone up 70% or something like that, and we now own 7.4% of each of the companies. And I just Greg and I together, we wanted to come over and talk to them, and so we got on a NetJets plane and plug and flew over, and we have had a terrific time meeting each of the 5 sequentially over the last 2 days, and it's been fascinating. And we feel even better about what we couldn't feel better about the investment. And over that time, we've sold periodically yen-denominated bonds. So more or less, we don't do it precisely, but we've insulated ourselves from exchange rate changes. So it's worked out very well so far, but we'll be in these stocks 10, 20 years. I mean, we weren't buying with the idea they go next week, next month, next year. But we have had revelations about each of the companies that, Greg and I are just fascinated by it. Right?
Instead of using his own capital, Buffett borrowed around 5 billion yen. The interest rate? A ridiculous 0.5% per year. Why? Because Japan's key interest rates were near zero, and Buffett exploited that. With this cheap credit, he bought the shares and collected dividends. The dividends didn't just cover the interest, they exceeded it by 16 times. That means Buffett earned 7 to 12% annually on borrowed money. No risk, no personal capital. A money machine created out of thin air. And if that wasn't enough, after just 4 years, the stock prices doubled. 5 billion yen became 10 billion. And since Buffett invested almost nothing himself, his return on equity was practically infinite. So what can we learn from this? Buffett's strategy was a masterpiece. He found a stagnant market no one wanted. He utilized cheap money no one else was using. He focused on stable dividends hardly anyone noticed. And the most important thing? Patience. He didn't speculate, he calculated. The best investments don't happen in the hype, but where no one is looking. And that's exactly where Warren Buffett made hundreds of millions, not with luck, but with wisdom.